results for IndusInd Bank. The quarter three, the big takeaway on quarter three is very strong operating profit growth, very strong growth in our revenue lines, growth of almost 21% in interest income, growth of 24% in fee income, and a growth of 27% in operating profit. And I think the big takeaway for us in the management is that the quarter-on-quarter growth, which is more indicative of the future to come, has been very, very strong in almost all the headlines, whether it's revenue or fee or cost management or operating profit, etc. So, very strong quarter-on-quarter growth, good growth in our liability franchise. So CASA is now at 44%, and in fact in this quarter we had a very good growth on current accounts as well, which showing a growth of almost 30%. The headline numbers on the balance sheet also look very strong. We had a credit growth of 35%, and we also had a deposit growth of 20%. Yeah. No, it's not. Is the mic? Okay. Can you hear me now? All right. So strong growth in our deposit line, 20%, and very strong growth on our lending line as well. So in the lending part, if you want to know the breakup of the growth, then the corporate bank grew by 34%. Vehicle finance continued to show very, very strong traction. And vehicle finance loan book has grown by 30%. And the non-vehicle retail book has also grown by almost 28%. So what we call a pretty secular growth in our lending book, which has been sort of spread out across several sectors, and there is no concentration. And as a consequence of that, some of the leading sort of concentrations that we had below 5% have reduced further. So whether it is NBFCs, HFCs, real estate, and MFI, all those sectors that people talk about, has actually, we've seen a reduction in the percentage contribution to our overall loan book. I talked about costs. The costs have been maintained well. Our cost to income ratio came down at 43.65%, so it's stable overall. And the fee income, of course, showed a very strong growth. Core fee income grew 18%, but total fee grew by almost 24%. And I think one of the vectors that fueled the growth is also, of course, treasury gains. There was volatility both on the rupee and the money markets. And if you rode the volatility well, then you made money, and our treasury did a great job in doing that. We are tracking well on our overall planning cycle 4. You know, we have these planning cycles that we design every 3 years, and we are on track almost on all the vectors. We have a slide that we can show in terms of PC4. Okay, it's okay, sorry. Other than that, I think in terms of qualitatives also, credit costs without including ILFS, which is the disclosure we've already made, which is still a standard account in our books. Credit cost came at 18 basis points. And therefore, our overall credit cost for the 9-month period is at around 40 basis points. And it's well within our annual stated sort of target of keeping our credit costs at below 60 basis points. So when we talk about business as usual, then our credit costs are well under control overall. I think the burning question is about the ILFS group, on which we made a full disclosure subsequent to last quarter's results, and where we had shown a provision already of 375 crores. That provision has been buttressed by a sort of a floating provision that we have, 350 crores we had made 350 crores and we had a 70 crore floating provision as well. We have added to that provision to take up the total attributable provision of ILFS to 600 crores. The status of that particular exposure is that the resolution plan in its final form is still to come, but we have good reason to believe that there is enough and more security, and we will assess in fourth quarter also whether we need to make any more provision, and we are more than happy to have, we already conveyed to the market that we will continue making provisions to reach a level that we feel should be a comfortable level in terms of covering our exposure as well, in terms of the haircuts. There are, to our knowledge, there are attributable assets in the holding company. We know it has realizable value, and we will take that realizable value into account in coming to the final provision figure for this particular group. So, in spite of absorbing this additional provision that we made, this provision also, like last quarter, is called a contingent provisioning. The account is standard, right? It's not an NPA in our books, but yet we continue making provisions on the account, and total provisions, as I said, is 600 crores. And we have no hesitation to say that we will make more if our assessment of the realizable value of assets in the holding company deserves any more sort of a provisioning. Now, in spite of taking that particular additional provision, we've shown a quarter-on-quarter growth in our net profit of 7%. So I think that trending is an encouraging trend for us. The year-on-year growth stands depressed at 5%, but if you go up two lines above that, you see the operating profit growth at 27%, which means sound underlying businesses. Every part of the bank is delivering, and delivering more than expectations. We can talk a little bit more about what's happening in vehicle finance or non-vehicle finance or in the corporate bank, etc. Other than that, we continue to open branches. 92 branches and banking outlets have been opened. You know now that there are revised guidelines of RBI that some of the BC branches, for instance, can be designated as banking outlets, so they can do all the branch banking work, and therefore the need for opening specific bank branches in rural areas, right, in unbanked areas especially, it can be replaced by these banking outlets through our BCs, etc. So 65 of those were actually also open. So we are well on track. We are spending the money on opening new branches and also on technology, and the client acquisition is also happening. Last quarter, we went from 2 million customers to, from 12 million customers to 13 million customers. This quarter, we moved from 13 million customers to 14 million customers. So we've got a run rate of 1 million new customers every quarter now. That's a quick summary. Yes, there are other vectors. I think net interest margin remains almost same as last quarter, and you see quarter on quarter there's an improvement in ROA, quarter on quarter there's an improvement in ROE as well. Earnings per share, etc. I think that's sort of the extra information that's already contained in the press release. So we can move on to a Q&A.
Going forward, how long do you expect this account to remain standard? And do you have floating provisions in place from which you'll be making these additional provisions? And to what extent would you be making additional provisions by the close of this year?
Yes. So whether the account is standard or non-standard in our book doesn't matter. We are going to make provisions well in excess of what they call the IRAC norms. IRAC is the income recognition and asset classification norms, which is prescribed by RBI. So we are going to make provisions well in excess of IRAC. So whether it's standard or non-standard doesn't matter, because the provisions we have made is already as per a non-standard account. Already. In this quarter, we will make more and go well ahead to this thing. Now, how we will arrive at the figure on how much more provision to make, I have said that this is a assessment done on the basis of the realizable value of the assets which are held in the holding company. We have a good sensing of that. We are fine-tuning that particular sensing on, and that will determine how much more provision. It's not the fact that it will become non-standard. We are far ahead. We are going to be far ahead of non-standard provisioning in any case. So we'll make more. We've already made that provision. Whether it's standard or non-standard doesn't make a difference. But in Q4 we will make more provisions so that we move into a zone of comfort as far as the realizable value of the assets is concerned.
So it's not even an SMA account with any of the lenders so far. We do understand because a lot of the bankers that approach.
Definitely is SMA. Definitely is SMA. SMA which 0, SMA 1, SMA 2.
Yes.
I don't know. Different banks will have.
But for your bank,
yes, certainly it is not SMA 0.
Is it SMA 2 for you, sir?
It is SMA 1, SMA 2, some SMA 1, some SMA 2.
Okay, so could you break up your exposure and the provisions you've made in this 3,000 crores to the group and the subsidiaries, and which one do you expect?
No, I think we have said in the past that we expect no loss on the SPVs. We have very good reason to believe that the valuation there is far ahead of the exposures that we have. So in the holdco is where we are making the provision, and that's where we know that there are realizable assets in this thing. We have a list of all those assets. We know the valuation as it stands in the books, but we will now do a realistic. We are doing in the process of doing a realistic evaluation of actual realizable value, and that will determine our final provision figure. So standard, non-standard doesn't matter.
So what were the slippages in this quarter for IndusInd Bank, and where were they from?
Q3 last year, 0.5%. Q3 this year, 0.46% net slippages.
So what is the status of the divergence report, RBI's divergence?
The report is out and we have no divergence to report.
Is it below 15% or is there no divergence at all?
We have no divergence to report. That's it.
To report?
No reportable divergence.
No
reportable divergences. Thank you.
$2,000.
2,000 crore. And also, could you give us an outlook on net interest margins?
Sorry?
On the net interest margin.
Net interest margin. So, if you saw previous 2 quarters, NIM had slipped. So we came off the peak of 3.98 to some 3.84. I think the yields on loans are now catching up. So the lag between repricing of the funding book and repricing of the asset book is now catching up, and therefore there's stability now in the NIM, and going forward we expect it to be stable at least in Q4 as well, and I think Q1 onwards is when we expect to start moving up back to where we were slowly on the NIM. So stable with an upward stance. Upward means improving stand.
What would be your guidance on credit costs?
See, our guidance on credit cost is what we do for ex-ILFS. Right? ILFS is a one-off. Ex-ILFS is what our business as usual. When we start 1st April of next year, we'll start without the ILFS because we would have provided. So ex-ILFS, our guidance, not guidance, our ambition has always been in the last 3 years that we should be below 60 basis points. We are at 40 basis points in 9 months. We expect that we will come in within 60 basis points.
So you said that the MSME book has shrunk. Could you point out if there are loans which would be availing RBI's dispensation for restructuring loans that are under 25 crore?
MSME book has shrunk. We didn't say that.
So what is the MSME book like at this point?
MSME book, we'll show you. We break it up. Part of the MSME book is in the vehicle finance. That also is this thing, right? And part of it is in our business banking services. There are 2 components to the whole book. The book has not shrunk; it has grown.
How much has the MSME book grown? If you could just run us through some details on that.
You can take a cue from the vehicle finance growth. That itself is 30%.
So do you see any underlying stress where perhaps you would need to tap into the dispensation made available by RBI for loans under 25 crore? Do you see signs?
See, even when the last time the dispensation was given, we had hardly used that dispensation. I think even for Kerala, when a dispensation was made, I mean, the total this thing was 100 crores or something like that. So it depends on who asks for it, right? It's not, we don't see that sort of stress in the business, but if customers are asking for it, certainly we will do that extension. At this stage, you can't estimate how much it is.
You have a lot of customers who are in that bracket of having defaulted but still standard on your book.
No. I mean, there is a breakup. Default means what? It's beyond 90 days is default. No. Those are NPS. They are already classified. But on the MSME, maybe Partha can give a little color on the vehicle finance book and whether the new guidelines which have come on giving dispensations and for those which become NPS after 1st January, whether we are going to use that at all.